Welcome, everybody, to Crossing the Line with me, Greg Heym, and Scott Nadler. How you doing today, Scott?
I'm great, Greg. It's good to be back.
It is good to be back. You know, again, I make sure we film on Mondays so we get every holiday off.
Yes.
You know, because I'm an economist.
Smart.
Yeah, we know these things.
Not just a pretty face, Greg.
Yeah, well, a prettier face now, maybe since. We'll get into that in a second. Episode 38. I don't. Do you give a gift for episode 38, Ray?
Yes,
Lena,
yes.
what do you? No, you have to give me a gift. It doesn't work the other way around. It's my show. Come on. We got Ray and Lena, as always, making me look good, hopefully. And today's September 9th. Now, this is eerie because it seems like a year ago, and because it was. We were filming on a Monday, getting ready for a Monday Night Football game where Aaron Rodgers is going to lead the Jets to the promised land. And he lasted 4 plays. And tonight he's going to try to do the same thing again. Now,
What do you think? What's the prediction?
well, you know what? This will probably get released after the game, so we'll have to film 2 versions of this so we can make sure I'm right. Going into San Francisco, that's not going to be easy.
I'm a Giants fan, and I feel
Yeah,
like we
good luck with
were doomed on Friday night when Saquon had 3 touchdowns.
Well, here's a tip. Don't wear uniforms that make you look like the Montreal Canadiens
That was
again.
horrible. Who made that decision?
I don't know. The same person who gave Danny Jones the ridiculous contract.
We can move on.
So was your weekend? Did it have any highlights to it other than watching the Giants get pummeled?
I went to a concert on Friday. I'm not a Deadhead, but I saw Dead & Co. at the Sphere in Vegas about a month ago, and then I saw a cover band called Almost Dead on Friday night at Pier 17 at the South Street Seaport. Have you been before?
No.
It's an amazing venue.
There's too many good venues in Long Island. Usually I don't come in.
This is worth it. It's overlooking the Brooklyn Bridge. It's absolutely beautiful. It was a beautiful night. It was fun. And then I'm a social guy. I was out and about on Saturday night in Soho, and I know we're going to talk about the economy in a bit. Restaurants are packed. Every place was packed. It was hard to get into a lot of places. So
Now, did you wake up in a Soho doorway? Sorry, I had to paraphrase the Who. True story. I know
did
Ray
not.
probably knows this. Pete Townsend wrote that after a night of drinking, where he was who are you? Literally in clubs in Soho, grabbing people, going, "Who are you?" Just you want to be interrogated by a drunk Pete Townsend. But that seems like a fun way to. I did nothing super exciting this weekend, but before I had my septum undeviated, so to speak.
Oh, let's talk about that.
If I sound a little nasally, it's because I'm still recovering. It's been almost a week. Thankfully, the packing is out. That's the worst part about it. So
that's good. Hopefully it's one step back to take a couple steps forward.
if I'm breathing heavy, it's because it's still pretty inflamed up there. So I
People are going
apologize.
to be listening very intently now.
Well, I have that deep, mellow,
You do.
calming tone to begin with. Now I can just hit that lower Barry White range.
Right.
But just to cheer myself up, I bought a Tesla. So very excited about that. Very cool car. Had a lot of fun driving.
It's like a toy, isn't it?
It's an iPad on wheels. That's what everybody says about it. And that's distracting because the big screen you have in front of you is amazing, but it's an adjustment. Like never using the brake on your car is something I would ever think would happen.
Right.
But with electric cars, that's kind of the way you're supposed to drive it. So a couple of times you get used to it, and it's a lot of fun. In fact, I could just honk the horn on my car right now if I wanted to.
You probably should.
Now, if I honk the horn and nobody's there to hear it, did it actually happen? I don't know. Then we'll save that for the philosophical episode. But anyway, we're here, as always, in Studio 1873, which is always tastefully decorated by our friends at the Everset.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
And we're back. My good friend Scott Nadler, VP of Lending for CrossCountry Mortgage. We like cross in everything here because you cross the line, you cross the country. We're always looking for things to cross.
Exactly.
And he is one of the top 1% of mortgage originators in America. Is that tiring to originate that many mortgages?
No, I love it. great.
He's got too much energy. We got to get people here that are, well, it's good. We need it. Because especially today, again, I'm a little slow, but how are we going to get Greg all animated and excited? We're going to talk about the August jobs report, right? Job growth below forecast again, but not as bad as July. At first, when you looked at it, you go, okay, it's a miss, but it's not as big as July missed.
The revisions, though, Greg.
The revisions make July look horrible, and we'll get into that in a second. But ultimately, it was viewed very much the same way, and stocks got pummeled after that. So the details, because we're legally obliged to do that, job growth 142,000, not terrible, but below the 161,000 Dow Jones forecast. Job gains in June and July revised down by a total of 86,000 jobs. It's not as big number as 818,000, but we'll get into that in a minute. But that's always a big ouch when you see revisions like that. The unemployment rate actually went down. Remember these surveys, two different surveys. Household survey gives us unemployment. Payroll survey gives us job gains.
I think a lot of those were part-time jobs, though, right?
Yes. One of the things that we find, it's funny, the PDF for this release is like 30-something pages long. And to find where some of this data is always a little bit tricky. And the household survey also captures new businesses. Like if I just start a business, so you get more information. But yes, all of the hiring for months now has been in part-time jobs,
Right.
all the gains in
Right.
hiring, which again, two theories to that. One, companies are a little worried about the future, so they'd rather take on less cost by hiring part-timers, or people getting a second job because inflation has been coming down, the rate of inflation, but prices are still going up.
Right.
And, that's made it hard for many people, particularly when you look at what's happened to the biggest necessities anybody has, which is food and shelter, which continue to go up.
Mm-hmm.
Speaking of one positive in the report, wages went up more than expected last month and year over year, up almost 4%. So that's good. They were above estimates. But again, that's not great news for the fight against inflation. So you look at the headline, you got 142,000 jobs, unemployment rate ticked down to 4.2. Maybe we don't have to worry about the SOM rule as much now. You go, it's not that bad. Like it could have been worse. And after you revised July, that growth was only 89,000.
Mm-hmm.
So the 89,000 to 142, maybe things are good. And the wages growing faster than expected. All right, what's the problem? All right, so let's get to the problem. As I called it in my column, here's what's got me concerned. And you jump in on this, guy, because I know we talk about
I want to ask you
yeah, go ahead.
about the stock market.
Okay.
Because the markets themselves, from businesses to the tech community, they've been waiting for bad news for the Fed to start lowering rates.
Right.
And now the bad news is here, and you're seeing the stock market getting pummeled. And it's almost like if I'm rooting for my sport, if I'm a fan of a sports team,
Right.
and my team is not doing that great, and in essence, we want to tank because we want to get the first pick in the draft.
Something
and then
the Jets are very bad at, by the way. That's how we missed out on Trevor Lawrence. But go ahead.
And then, so let's say you're, and then you're complaining about your team losing.
Yeah.
So it's you can't have both. So it's
So what
an
gives?
interesting dichotomy.
I was watching. There's a documentary on David Chase and his coming up with the idea for The Sopranos. And there's a great scene that they showed in this where Tony is yelling at Carmela about pulp in the orange juice. And she goes, well, I thought you liked pulp. And he goes, but not this much. I want where it says some pulp. Yeah, some pulp. No. And we've been talking about this for the last couple of months. Be careful what you wish for. We all want to see CPI, PPI, PCE come down. We want to see job growth cool. But then when it cools more than they're comfortable with, but nobody wants to see recession.
Right.
And that's the hard part here, that, the Fed has already said, like, all right, we're giving you a cut in September. That's going to happen. But now people will start to get greedy because they'll say, all right, now you better go 0.5% or 50 basis points because 25 ain't going to cut it. But the magnitude of the cut doesn't matter so much as the lag time it's going to take to do anything. And again, we say it every week here on the podcast, Doesn't mean mortgage rates are going down 0.5%. You know, it could mean the exact opposite if inflation starts to pick up a bit again.
Well, they've gone down around 1% over the last couple months, and the Fed hasn't done a thing.
Right. And just, again, it's been over a year. It was July of 23, the last time the Fed did anything. And you mentioned rates tanked at the end of last year. Then they came up at the beginning of this year.
Right.
Now they've been drifting lower since about May-ish. You know, now lowest since I think April 23. You know, rates that people like now, they're sitting a little under 6.5%, which is good.
Right. And then I know also in terms of the stocks, you know, the September effect.
It's the worst month for stocks.
Typically the worst month, and especially in an election year, it's typically not great.
Yeah, I mean, we talked about this maybe a month or two ago that studies have shown that presidential elections don't really impact stocks that much, about 0.5% at best. But the thing too is what drives the stock market is all of this AI-driven algorithmic trading, right? That's set to go off on a moment's notice. And at a time when a lot of people think, particularly tech stocks like NVIDIA, are way overvalued.
NVIDIA lost, they were down 14%.
I mean, NASDAQ had its worst week in 2 years.
Yeah. It's $405 billion off their market cap.
That's a bit of a
bad
haircut. By the way, I got a haircut this weekend too.
I can tell. You know what? I was going to say something
What
earlier.
else can
and
you do when you're not feeling good? It's like, I'll go get a haircut. But yeah, no, I think, I mean, it's a combination. The job growth slowing is okay, but the downward revisions, like every month, the prior 2 months are downwardly revised, and it's been nothing but downward. You add that to the 818,000 jobs the year ending March that just disappeared because they didn't exist. You know, and the stock market panicked last month when the July's report came out, because at that time they thought it was 114,000 jobs. Now it's 89,000 jobs. So now they're going to wonder, well, what's this number going to get revised down to? Right. And we joked about this on the last podcast 2 weeks ago. It's like every number you're going to question, right? Yeah. And how is the Fed supposed to make these important decisions when they got to think in the back of the mind the same thing we're all thinking?
Right.
Is this number legit? It's hard to know. And if they're not legit and they're worse than they're announced, which they clearly seem to be, how far behind the curve is the Fed right now? Because based on the information that we had, like, no, they don't need to. Why do they need to cut? The unemployment rate's low. We're adding 150 to 200,000 jobs a month. Like, what's the problem? And now you see those numbers coming down and then getting revised down lower. And it's like, are we losing jobs?
Yeah.
So where does it end, Scott? Now
and we can't trust the data. So I think we're getting to a point where it's like this new normal, where we're looking at the data, but you're looking at it with a grain of salt, so to speak. And I don't know if the Fed's really looking at it that way, or at least they haven't been.
They got enough economists over there to give enough points of view that I think that this is why, even though the market is sensitive to every data point that comes out, you know, at least as of early this morning, the stock market had shrugged this off. You know, those programmatic trades happen because things are on a bit of a run. And then you have a weekend and then it's like, it didn't happen.
Right.
Now we're waiting for the inflation data this week, right? The PI brothers, and that could either make people forget this jobs report completely, which is what happened the prior month, or it could start a panic, because if you have slower job growth that keeps getting revised downwards, and then you have inflation rising or not going down, then people start thinking about stagflation. Right. So, and remember, you heard it here for the longest time that we were never going to be in stagflation, because the number one thing about stagflation that we don't have is an elevated unemployment rate. Now, from our perspective, it's more important that it's gone up as much as it has recently than how low it is. But from a stagflation point, it has to be elevated. And in the low fours is not an elevated unemployment rate. There were two other things that, and we touched on one of them, that concerned me about the state of the labor market. One is that the hiring is, job gains are all in part-time jobs. That's concerning.
And the quit rate is very low as well.
Well, because good segue, the number of job openings hit its lowest level since January 2021. It's still pretty high, but again, it's the rate of decline. You know, it seems like a couple months ago we had 10 million jobs available.
But so I think the JOLTS report also is something where I don't know how you can trust that data.
Well, the JOLTS report lags too. Like this JOLT data is for July.
But it's also, I might be wrong here, but you would know.
Would I?
I think so. During COVID, when there were a lot of remote workers,
Right.
if I'm posting a job opening and I just need one person, but I can post it in all 50 states, are they counting that as 50 job openings?
I don't know if they it's kind of like employment. If I have 3 jobs, it's counted as 3 jobs.
Right.
Even though, 2 of them could be part-time.
Right.
So you always have to dig down into the numbers. The JOLTS data is been around only about 20 years, so we don't have a lot of history on it. And that's job openings and labor turnover survey. And it's good information, but it'd be a lot better if it was more timely.
Mm-hmm.
And I think now it's a lot easier to measure that. Try measuring job openings in the 60s.
Right. It should be a lot
You
easier.
could open
now.
like every newspaper
Right.
and like count. When I worked at the BLS in the early 90s, we were still doing most things on paper. We just started using email and, getting some feeds from larger companies. But also too,
The 40s were a different time.
well, what do I know? I can't remember it. I was there. No, I think that the other thing is the survey for these employment reports happens in the middle of the month because they have to tabulate everything. So if things get bad in the second half, you're not going to know
It's not
that.
accounted for.
And
Yeah.
that's where these revisions come in.
Right.
I mentioned before, when I do market reports, I revise all the prior data when we issue them. And sometimes those revisions are big.
Right.
But you'd rather have accurate numbers. So, the stock market, again, the S&P had its worst week since March of 23. The NASDAQ is over 2 years, I think. So what does this mean for what the Fed does? You tell me what you think, because I'm going to go second on this so I can,
What's the prediction for what they do as far as the rate cut? I think they're going to cut 50 basis points. That is my prediction.
And why?
I think with the jobs reports that we've seen over the last several months and the weakening in the labor market, I think they're trying to, and inflation numbers have been coming down. I think for those 2 reasons, I think the comments by Powell, you're starting to see that they've recognized the fact that they might be behind the ball a little bit. I don't think 50 basis points is that drastic. So I don't think 25 is going to be enough.
Well, I mean, if I'm just looking at this jobs report, I don't think they need to go 50. I agree with everything you said about how the labor market is clearly a lot weaker than we thought, and we're finding that on a monthly basis. But I don't know, does 50 act like they're bowing to the pressure? Are they going to scare people? They're like, wow, the Fed went 50. We wanted it, but we didn't think we were going to get it. I don't know. I don't know if that does it. But again, we have the
Sometimes perception, I think, is reality.
Yeah.
And I think it probably signals to the market that they're paying attention more so than just
or the market was successful in bullying them into doing 50.
maybe.
But as you mentioned, we still have
Last time they cut, didn't they cut 50?
I'm trying to think. It was a long time ago.
It was a long time. I know. We'll have to get back to everyone.
It's like, wow. It's funny because, you talk about in real estate, like a lot of brokers have been in the business X amount of years and never seen a down market, or people have been in the mortgage business and never seen 7% mortgage rates, which is
I've been doing this for 15 years, and on the last couple of years was when we saw rates go up.
To do with it. I think people, but again, we have data coming out. CPI, PPI, and retail sales are all going to come out before their meeting on the 18th when they make their announcement. So a lot can change. Now they're talking a lot more. I mean, the Fed never used to say anything other than, we're cutting or we're hiking or we're doing nothing, because they don't want markets to panic. They want to telegraph what they're going to do, so all that stuff gets priced in and we get on with our lives. I don't know. I think it's a 50-50 proposition at this point. And
What do you think they should do?
I mean, based on where we are right now, 25 would be sufficient because, again, you're talking about something that's going to take 6 months or longer to work. So you cut a full percent if you want. It doesn't mean things are going to be fine next week.
Right.
Yeah, stock market will love it. We'll all like our 401ks, but
it is amazing. The amount of phone calls I'm getting from clients who say, let's wait until the Fed announcement so then we can lock in a rate. It's the vast majority of people believe that. Even brokers too.
That's another great segue because we're going to talk about the mortgage
I'm getting good
market.
at this.
I'm going to be out of a job. What do I need him for? The guy's got the nasally thing. It's like I'm putting everybody to sleep, including myself. But this is a good time, though, to take another break for another very important message.
What do you really need to know about buying or selling a home? First, it's serious business, and it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.
And we're back. Love saying that. We're back.
We are back.
So let's talk about mortgages. There was an article this week that our good friend Matt Leone was nice enough to, and I'd seen it. We're talking about the expectation of lower rates. Rates have actually been going low already. So where have you guys been? But welcome to the party. So about preparing for lower rates, and a lot of this stuff is stuff people normally do when they buy a home anyway. Just quickly, the 4 things in the article. Consider whether to act before rates fall any further, which we've talked about, that you could miss out on a great deal. Prices could go up, right? When you tell someone, or you're trying to point out that now is a really good time to act, how do you approach that?
There are 2 things that we're looking at now. Number one, it's clients who need to refinance, and then it's people who are in the purchase market.
Yeah, we forgot all about refinancing. That happens.
So refinances this year up 94%.
Well, of course, because
rates are down a little bit. But also, I think what's interesting is when rates comfortably hit 6%, that's going to deem 2.5 million people eligible to refi. They're going to be in the money. When they reach 5.5%, I think it opens up 4.7 million people. And then 5%, it's 7.1 million people. So as rates continue to drop, more people are going to be eligible to refi, and in turn are going to be eligible to buy a home because their payment now drops. So it attracts more people into the market. So in terms of people that are buying, look, it's impossible to time.
You can't. You can't. I bought mine in 2006.
You can't time this. But I think it's important to be prepared and to understand what the direction is as far as where things are going.
Right.
And
if they understand that, let me know, because we could use the help on the show.
Yeah. Well, I think it's just following trends. It's fleeting. Rates also go up very quickly and they go down very slowly.
It seems to work that way. Yes.
Yeah.
We don't want them to go down very quickly because that means the world's ending.
It goes. Yeah. That is not good either.
The thing I when brokers come to me, for talking points, first of all, you worry if rates are coming down, that can mean prices might tick upwards, right? And inventory has risen significantly year over year, but doesn't mean it's high in most places. No. So if a lot of people that needed to move are going to move, and that inventory could get, picked up like that. And then you're going to face the same problem you've been facing, last couple of years.
You're already seeing that.
Yeah.
A lot of brokers that I'm talking to, open houses are being filled up. Everyone's hearing about the fact that interest rates are coming down. I speak to a lot of listing agents. So I'll have a buyer's agent call me. They'll introduce me to the listing agent. And they want to learn about that prospective buyer making an offer. And they'll ask me about the qualifications. And they'll ask me if they can waive their mortgage contingency, which is not my decision. But we're seeing a lot more of that, of listing agents controlling the deal, saying they should waive their mortgage contingency, or we're going to accept an all-cash offer. And waiving your mortgage contingency is akin to an all-cash offer. Right. So to your point, I mean, that in and of itself is going to drive home prices up because you have more people that are vying for that same property.
And again, you could miss the home that's perfect for you. You're going to live in it for decades. There's always a chance to refinance. And again, perspective. You know, when I bought my house in 2006, I think my mortgage is 6.75. I was happy with that, you know, and I got to cut it less than half of that, which is great. But I think that we trying to control everything in here. Like, I want to get the lowest rate. I want to get the lowest price. I want to get this, to get that. But it doesn't work that way.
So I spoke to a client recently, a Gen Zer, your favorite. And
I love my son. The rest of them are none of my business.
So he said, I think rates are too high right now for me to buy. And I asked him, I said, what do rates have to be at for you to be comfortable to buy? And we said rates right now are around 6.25%. He said, if they were at 5.75%, I'd be comfortable. So I said, all right, you're looking to buy $1 million home. You're going to put 20% down. That's an $800,000 loan. At the difference in payment between 6.25 and 5.75 is $257 a month. Over the year, that's about $3,000. So if you can, with your broker, negotiate a $3,000 seller credit when you make an offer, that covers a year worth of that difference. And then in a year from now, you could probably refinance as rates are trending downward. So I think when more people see the payment versus the rate itself, because the rate's the flashy thing, but ultimately your payment is what matters, and they see what that difference is, it highlights what's important for them, and they can make a decision that way, whether it makes sense for them or not.
I think people are laser focused, like you said, on the rate and the price, and they forget there are different mortgage products out there. You talk about concessions, you know, everything is negotiable.
Correct.
Everything. And I think that's important. Just to finish the list, this is all stuff people do on these. So we had consider where the Act 4 rate drop, work on becoming a well-qualified borrower. We should be doing that every day. We all want to be well-qualified borrowers.
Start early also. Even, you know, if you're just thinking about buying a home, consult with your mortgage professional and get pre-approved. That doesn't cost anything.
That's number 4.
Oh, sorry.
No,
I'm skipping
okay.
ahead here.
It's okay. It's all obvious stuff. Number 3, stay informed about the mortgage market. I mean, just go to CNBC on a daily basis, or, you know, if you're working with a lender, I'm sure you send out a lot of information. Your agents certainly have that information and good relationships. You know, make informed decisions. That's the key to buying any major purchase, like the Tesla I bought. Make informed decisions, understand, you know, the ramifications, and, you know, realize that things change over time too. Right. You may be locked into the house, so to speak, but you're not locked into the rate.
Right.
And, well, you are that rate, but you can always, you know what I mean. Again, it's a little slowness, but we'll. All right. So this is an article that was fascinating. The headline just grabbed me because it involves our Gen Zers.
Yes.
So according to Redfin, the home ownership rate for Gen Zers, and they mentioned 19 to 26, because obviously my son is only 17. I'd be very proud of him if he bought a home, but it would probably be with my money, so that wouldn't happen. So the ownership rate between Gen Zers between 19 and 26 last year was higher than the home ownership rate for millennials and Gen X when they were 24. So you say, well, wait, aren't these the people complaining they're never going to be able to buy a home? What gives? And Gen Zers are just 3% of all home buyers, according to the National Association of Realtors. So how does that happen? Well, when I tell you the number one reason, you're going to be like, interest rates and location. So what does that mean? Well, a lot of Gen Zers bought houses in 2020, 2021, early 2022, and getting less than 3%. Much lower rates. When I was 24, which was in 1994, the month of my birthday, rates were 7.1%. And millennials, when they were 24, was around 6%. So, you know, there were higher interest rate environments than these Gen Zers. And the location where they're buying these homes are in the Midwest. You know, they had the video that came on with the story showed like Lincoln, Nebraska. Yep. Like they're not buying in the expensive cities because they can live anywhere, and they're happy to work remotely. The other 2 reasons were financial help. 78% received financial help.
Mom and dad.
And half are single. That's, you know, this idea that marriage isn't first on the to-do list is certainly prevalent in this generation. So did this surprise you, or you're like, I knew that already? I made all those loans to those Gen Zers.
No, I don't know if I knew the numbers just like that, but it's a little surprising because I think the Gen Zers have this chasing the American dream is always buying a home, and that signaled that dream. Now it's more being mobile and then being able to be a remote worker and work from anywhere. But I think, to your point, there's so much information out there now, and these Gen Zers know how to access all that. And when they're reading that interest rates are at historical lows, it makes them think maybe I should buy a home.
Well, I think their parents outside of financial help also gave them advice.
For sure. 78% of them getting
18%.
For sure.
I had 18% mortgage. You can get 2.9. You should jump on it.
Yeah. It is amazing when I speak to clients from different generations where we'll quote a rate and someone of a certain age will say, I remember when rates were 8% or 9% or 18%. And then you'll speak to a millennial or Gen Zer and you'll say, 5.5%. It's like, it's way too high.
You know what? I mean, people only know the now.
Right.
Prisoners
of the present, for sure.
It's that, and we talked about this study for a while. The average person thinks the historical average for mortgages is 5.5%,
right,
when it's like 7.7%.
Yep.
And people forget wages have been growing very quickly. The amount you get on your savings account, those interest rates are very high. So I think
it's also never low enough. Because we're talking to clients who we quoted them rates that were 1% higher than they were a month ago, and now they're like, I wish it was sub 6.
If it went down that much, it's going to go down.
Exactly.
It's you want to be optimistic, but you're being pessimistic at the same time, because rooting for lower rates means you want the economy to slow. You want fewer jobs out there. It's a hard thing because you feel you're rooting against America almost.
Right. Temporarily.
Until you get your mortgage, then you want things to calm down, right? And then you can brag about, I found the perfect time.
Exactly.
It used to be like, during the run-up before the financial crisis, people would brag about what they paid for their home. Now they brag about their mortgage because nobody cares what you paid for your home. It's like, wait, you have 2 3/4? How'd you get that? Well, I found the exact right moment. It's crazy, but yeah, I can understand the frustration. It's like, hey, Bob, remember when you said call me back when rates are 6 1/4? Well,
right.
They're 6 1/4. Call me back when they're 5.5.
Right. Exactly.
So,
and brokers say the same thing. They say, if rates just got to the mid 6s, I think the market's going to pick up. It's like, well, we're here. And now they needed to go even lower.
Yeah, but that's like Jet fans saying, if we just got a quarterback, we could win a Super Bowl, and then
you got one.
He for 4 plays, and then we hear him run his mouth for the next year when he hasn't won any games yet.
Yeah.
Hopefully, again, we'll have to put a disclaimer on the bottom that we did this before the game.
No pressure tonight for him.
I don't think he feels pressure because he's probably his own worst critic, and that's good. It'll drive you.
The bar is low. He has to finish the first quarter.
Well, go to 5 plays. Hopefully it doesn't tear the other Achilles.
Right.
That would be Jet fans would not be surprised. We would really not be surprised. The year we went to the AFC Championship game, I think it was 98 with Testaverde, the opening game, he tore his Achilles the next year. I was at that game.
It was your fault then.
You know why it was my fault? I did the night before that game, I bought a Testaverde jersey. Because he grew up in Elmont. I'm a Valley Stream guy.
There you go.
But anyhow. We digress, but don't we always? We're just glad football is back.
Yes.
So I can sit there and watch Red Zone.
It's a good time, for sure.
The ultimate short attention span way to watch games.
Yeah, it's bad.
But it's fun because I love doing that with my son. It's a fun thing to do. And we were watching.
Are you in a fantasy league?
No, he is. But the last time I did it was so long ago, we still had bulletin boards. And you would download the text file of the stats, and you were still calling people to make trades.
Wow. Okay. Different time.
I never did well at it, and I just stopped doing it. Plus, there's a lot of underhandedness that used to go on. I don't know if it still does. People not trading with certain people and collusion and alliances and stuff.
It's like real life. Yeah.
Yeah, it's like watching Survivor or something
Yeah.
like that. Yeah, you say so people can act. Yeah, it's funny. That's a good way to put it. See, I try to be the optimistic economist, and look, no, I'm not like that at all. Especially over the last week. But all right, well, I guess that's it, unless we missed anything. Lena, did we miss anything?
No.
Okay. See, there's the
Lena
judge.
knows.
Covered it all.
Oh, I did have to mention a concert I saw because we weren't here last week. I saw Yes and Deep Purple. And Yes was really good, although Yes is really just Steve Howe. Although Jeff Downs is in the band. He's been in Yes for a while. But they played what you wanted to hear. Great versions of Yours Is No Disgrace, Roundabout, Starship Trooper, really good stuff. And then Deep Purple opened up with Highway Star, which had us all like really going nuts. And then it's like, here's 6 songs from the new album, and you lost us. You know, Ian Gillan, I think, is 79. Like, I don't know how he sings any of this.
Where'd you see them?
Jones Beach. It's a great venue. You talk about Pier being
Of course,
great.
yeah.
It's great to go to the show at Jones Beach when the weather's nice, which it was that night. It was
beautiful.
absolutely beautiful. When I saw the Beach Boys about a month ago, it was windy and raining, and it was terrible. And the Beach Boys weren't very good. But it is a 4-minute drive from my house, so that is what really makes it the best part. And $25 tickets.
There you go. It's nice.
Yeah, I saw 3 concerts with 6 Hall of Fame acts this summer for $25 a ticket.
Wow.
The Skinner ZZ Top one with the Outlaws opening was my favorite. That was a really good show. And one more plug. All guests of the show receive lunch compliments of my good friends at Canaletto, located at 208 East 60th Street.
That was so good.
Or 60th and 3rd. I'm running on fumes. I'm going to collapse. Let me finish this. Serving the best Italian cuisine in Manhattan since 1998. And it is my favorite restaurant. Tell them I sent you. Just don't ask for my table at lunch. You're not getting it. It's my table. Alarms go off if you try to get near it. But thanks, Scott, for riding shotgun as always. We'd love to have you on. It's a lot of fun. Thanks to Ray and Lena. Thanks to our sponsors. And thanks to all of you for supporting the show. Again, it's been great. And we look forward to crossing the line again next week. And I don't think we have any Mondays off for a while. So, yeah, except Columbus Day might be the next one, I guess. So, so you get more of us. Hopefully that's something you're looking forward to. But have a great week, everybody. We'll see you next week.